Welcome to this week's Market Update, where we review what moved markets, what drove our performance, and the key events ahead in the week to come. Let's start with what moved markets this past week. Three themes stood out: the AI investment cycle broadening, higher long-term yields shifting focus for income investors, and surprising resilience in housing. Nvidia's latest results confirm that the artificial intelligence boom is spreading well beyond big tech and into businesses, industry, and government. Revenue surged 85% to $81.6 billion, and the company pointed to expanding opportunities in robotics, autonomous systems, and what it calls physical AI. This signals the next wave of growth could reach across many sectors of the economy. For our portfolios, it reinforces our conviction that AI is a durable, multi-year theme supporting earnings growth and leadership among high-quality, large-cap technology companies. Turning to the bond market, the 30-year Treasury yield climbed to its highest level since 2007. But the fundamentals beneath that volatility remain solid. Companies are still investing aggressively, and consumers continue to spend despite tighter financial conditions, an encouraging sign of underlying economic strength. For income-focused investors, this environment is creating attractive positioning opportunities within fixed income and select dividend-oriented strategies. Housing also showed impressive resilience. Despite the average 30-year mortgage rate ticking up to 6.51%, pending home sales rose for the third straight month, while new listings and contract signings reached their highest levels since 2022. This durability reflects healthy household finances, solid job markets, and resilient consumer confidence. It supports broader economic growth and creates opportunities in housing-related sectors, financial services, and consumer spending. Now let's look at what drove our performance over the past week and why we remain confident in our positioning. Nvidia was our strongest performer with an impressive 18% gain, driven by surging optimism around AI infrastructure and accelerated computing. The rally reflected growing confidence in sustained data center demand, next-generation chip adoption, and expanding enterprise use of generative AI. Nvidia's dominant position across AI infrastructure, networking, and computing continues to make it a cornerstone of our growth-oriented holdings. The information technology sector delivered our strongest contribution, powered by standout gains from Qualcomm, Nvidia, Apple, and Broadcom. This strength reflects continued enthusiasm for AI infrastructure, cloud demand, and the early stages of what we believe is a multi-year investment cycle. These large-cap leaders combine balance sheet strength, earnings visibility, and the ability to monetize AI across chips, software, and the cloud, qualities that keep attracting institutional capital. Our size strategy was the week's strongest performer, with mega-cap holdings like Nvidia, Alphabet, Tesla, and Apple outpacing the broader market. Investors continue to gravitate toward globally scaled companies with durable balance sheets, strong cash flow, and direct exposure to AI growth. These advantages let the largest companies sustain heavy investment and lead across multiple markets, reinforcing our confidence in quality large-cap positioning. Looking ahead, here are the key events we're monitoring that could shape markets in the coming week. Thursday brings the Federal Reserve's preferred inflation gauge, the core PCE price index, which most recently rose 0.3% for the month and 3.2% over the year. While still above the Fed's 2% target, this report helps shape expectations for the path of interest rates ahead and offers valuable insight into how quickly inflation is cooling. Also Thursday, we'll get an updated look at first quarter economic growth, which expanded at a healthy 2% annualized rate. The gains were led by an 8.7% jump in private investment, including the fastest business equipment spending in nearly 3 years, much of it tied to artificial intelligence, encouraging signs that companies are positioning for long-term productivity gains. On Friday, attention shifts north as Canada reports fourth quarter GDP, with full-year 2025 growth coming in at a steady 1.7%. The quarter reflected continued strength in household spending and government investment, useful context for the broader North American economy and our Canadian holdings. Thanks for joining us, and we'll see you next week.